Good afternoon and welcome to this Nordics Property Insights webinar, Social Infrastructure Properties for Life. My name is Andrea Carpenter. I'm the Director of Women Talk Real Estate and I'll be your moderator today. In recent years, we've seen the market for social infrastructure and community service properties really take off in the Netherlands. We're seeing demographic megatrends, we're seeing ageing populations and urbanisation, combined with a favourable regulatory environment. This means there is an increased need for major investments in social infrastructure, and the demand for existing suitable products has increased rapidly. And of course, the importance of social infrastructure has only been further highlighted by the pandemic. Today, we're going to look at how social infrastructure will evolve, how to balance that private versus public relationships, and what role domestic and international investment will play in the sector. And I'm delighted to be welcomed by a group of experts today to discuss that. First, with an overview of the social infrastructure sector in the Nordics, they give us that key tour of the key market activities and trends which are shaping the market. I'm delighted to welcome Anders Elvinson, Head of Valuation and Strategic Advisory Services at Cushman & Wakefield. Anders, over to you.
Thank you, Andrea. Yeah, like Andrea mentioned, I'm going to give you a market overview of the social infrastructure in the Nordics. And first off, I'm going to have to send out an excuse to all Danes, Norwegians and Icelanders out there, because this is a good snapshot from Cushman & Wakefield's Market Beat report for nursing homes published last year. But I think it gives you all a clear view of the differences between the countries and other major European countries like the UK and Germany. You see prime yields, example, in Sweden are close to the ones in UK. The liquidity in the segment is more or less the same in absolute numbers as in Germany and UK, in Sweden and also in Finland if you adjust for the population. Hence, there is 7 to 8 times the population figure in the major countries. So it's a really liquid segment here in the Nordics. For example, in Sweden, we also have a really good possibility to increase private operators within the nursing home sector, which is about 19% last year. And in the UK, it's over 80%. So looking at the nursing home segment in Sweden, which has been enormously attractive for investors, the yield has dropped from about 5% 5 years ago to now being below 3.5%, estimated to clock in at around 3.25% end of this year. And that's nursing homes in attractive suburbs to Stockholm. And it's really because of the reduced risk, because the age group 80 years and older is expected to increase by more than 50% in just about 10 years between 2019 to 2030. And the same number for Sweden as a whole is just 7%. So we see good fundamentals, an aging population, an increasing wealth, and that goes for all the Nordic countries. So which are the key players on the social infrastructure market in the Nordics? In Sweden, we have a number of players like SBB, which are active in all of the Nordic countries except Iceland. Hemsö, also a major player active in Sweden and Finland, and one of those investors that are also active in Germany, especially in the nursing home segment. We have Rikshem, backed by institutional capital, which focuses on healthcare, nursing homes, preschools, and also residential. Akademiska Hus owns universities and other types of school facilities all across Sweden. They have actually been selling off a few assets this past year, so that's interesting. In Denmark, we have NREP, who's a major player focusing on several segments, and social infrastructure is one of them. They are active in all Nordic countries except Iceland. In Finland, we have a major player in Northern Horizon, focusing on mostly nursing homes, active across the board as well. And a major player in Norway is Kinland, focusing on preschools. They are active in Sweden, Finland, Norway, and also in several other European countries. On Iceland, we have IR, which is maybe not pronounced correctly, but I'll keep that pronunciation. It's a foundation which was initiated by Reykjavik City and some adjacent municipalities together with trade unions focusing on developing nursing homes. And if you haven't lived under a rock the past 5 years, you have noticed SBB's incredible success story. They now have assets exceeding 100 billion Swedish kronor. They scooped up Hemfosa, Offentliga Hus here in Sweden, and have bought major portfolios in Norway and Finland. And they have also started off in Denmark with a portfolio of about 100 million euro in assets acquired in several transactions. And to be mentioned is that Denmark is the most unmature market of the Nordic countries apart from Iceland, because it's not that common to trade these type of assets in Denmark. You focus now really on developing new assets in your own books, and NREP is one of those players, but it's getting more and more common to trade these type of assets, which the next slide will show. Assets that has been traded this year. We have, for example, university campus in Finland that was bought by Hemsö this past February. Also, we have a major portfolio with kindergarten purchased by Kinland in Norway. And then we have Akademiska Hus, who sold off 2 campuses to Swedish Intea, which is backed by institutional capital in Malmö and in Kristianstad. And we have actually one transaction carried out with a nursing home in Denmark. And it was bought by Northern Horizon, also mentioned the Finnish investor this past autumn. So, social infrastructure, there are some similarities and irregularities regarding lawmaking and regulations within the Nordic countries. So you really have to know about that before you enter the market. But it's really the talk of the town, together with logistics and residential right now. The yields are taking new lows for each day almost. It's a huge interest. However, some investors says that Sweden is getting expensive, so their gaze is towards Norway and Finland, and in some cases also Denmark, where the yield spread is significant between these countries. So why really invest in social infrastructure? Well, you often have purpose-built building, which often is really good because the tenants tend to stay on for several prolongation. I think there was some study that reached the conclusion that a social infrastructure tenant usually stay on for at least 30 years. But since it's purpose-built, you often have some sort of risk if it's not some sort of special home when the lease expires and the tenant moves. But also one good factor for an investor is that it's triple net or similar, so you don't really have to do that much once purchased, and the lease is long, so it's fairly easy to manage for the investor. Back to you, Andrea.
Thank you very much, Anders. That's really interesting. It seems like it's very competitive in Sweden and in the nursing home sector. That seems to be kind of the heart of it. Where else do you see? Do you see kind of Sweden getting more competitive, or do you see people moving to get yield in other sectors and in other countries?
Yeah, it's really competitive in Sweden, especially for nursing homes, where we now see yields going down towards 3%. That was unheard of for 2 years ago. So that's spectacular. But also universities with long leases, other types of school facilities, office building backed by governmental agencies and similar, where it's more like it's like a bond really if you have a long lease. So it's a lot of capital going in and being aggressive in the bidding for that type of assets.
Okay, so prices are going up because of the weight of capital as well. I mean, we see that weight of capital. Do we see the appetite from the other side as well? Do you see many more public institutions or social infrastructure providers that want to kind of have more private money coming into their sector?
It's mostly institutional capital because they like low risk assets, and since funding is quite easily to get right now and it's quite cheap, you still get a good return on equity on these type of assets. So it's mostly institutional backed investors in this segment right now in a way.
And do you see more of those occupiers getting involved? Do you see more local government becoming involved? You know, you obviously have the private side with the nursing homes, but they can often also be government backed. Do you see more supply in a sense coming from that way?
We have some operators that are taking the supply that they need in form of example nursing homes, that they are building it themselves and then selling it.
Okay.
And I guess that's quite good. You take that extra money yourself instead of the developer, but that's quite rare. So I think it's a good niche for developers to get into because, as shown, the age group 80 and over is increasing quite tremendously.
Yes, it's interesting. It's becoming more competitive because the Swedes are getting older in that sense.
Yeah,
that seems to be the driver of the market. But you say there needs to be a lot of development then. Who's going to take that development risk? Do you think that's going to be in partnership with some of these institutional capital providers?
I think since it's the developers there that's on the market, they are quite good and they have the experience. I think they want to keep the profit for themselves really. But we'll see what happens.
Okay. Well, Anders, thank you so much for your time and giving us an overview of the market. And we'll be back with our next session in just a moment. Thank you, Anders.
Yeah, great. Thanks.
For our next session, we're going to take a look at the inside view on investing in social infrastructure. I am joined by a panel of Nordic-based developers and managers of social infrastructure properties to talk to us about current market trends in the sector, as well as some of the challenges that they face. So today with us, we have Poyan Katabi, CEO of Sam Fastigator, Jarkko Leinonen, head of region for Hemso Finland, and Carl Lund Mortimer, Head of Project Development at SBB. We were advertised to be joined by Ebba Ostlin, the Mayor of Botkyrka, but unfortunately she's unwell, so we wish her a speedy recovery. So Carl, Anders mentioned your company quite a bit in that presentation, so I wondered if you could start by maybe giving us your reasons for investing in social infrastructure. What is the appeal for you? I think you're on mute, like many of us always are.
So sorry.
No worries.
First, we have the global megatrends, aging population, which is also apparent in the Nordic region. And then we have a growing population in all Nordic countries, especially in Sweden, and Denmark, and Norway. So that's the fundamentals. And then you also have stable governments. So Sweden, Denmark, and Norway, they are all having AAA credit rating. So you have very stable cash flow. So I think the combination of stable cash flows and the demographics are the things that are driving this sector.
Okay, and Poyan, what the same view from your perspective? I think from a nursing home perspective, what's like the rationale for you to be in that market at this stage?
From our perspective, it's mostly the demographic and also the legislation. It is quite unique, and the way that mostly Swedes and Finnish governments wants to take care of its population, regardless of if it's disabilities or older citizens. That makes it, like Carl said, very stable. And for us, it's a very interesting place to be right now. So.
Yeah, okay, I want to talk about some of the opposite of that kind of regulatory side. There's risks involved with that as well. But maybe, Jarkko, I can talk to you about the view from Finland in terms of your reasons for being in the sector at the moment.
Well, the reasons are pretty much the same as Carl Lund and Poyan just described, and also Anders in the opening. It's a long-term, stable cash flow, relatively low credit risk, reliable tenants. Obviously, there are certain issues one needs to consider, like the residual risk we just heard of, but kind of like the purpose-built properties, it often means that moving out it's a step, it's a challenge, and if you kind of like treat your customers well and maintain the properties, they are happy to continue.
Yeah, and Carl, the risk return side, we saw that the returns are steady like a bond. They're very. Is it the income generation that is of most interest to your group?
Yeah, I would say so. It's the stable cash flow over time that you can count that you will have the rent will come every quarter. I think despite the Corona pandemic, we had a rent collection of 99.8%. So it's very stable. So from an income perspective, it's of course the most important aspect that they are very stable.
Yeah. And Poyan, it sounds from Anders' presentation, it's a very competitive sector, particularly in your part of the market. So how do you counter that? How do you remain competitive?
I think for all of us, we need to find the key drivers that makes us unique. It's very hard for someone like Samfastheter to compete with SBB or Hemsö. They're too big for us right now. So we need to find niches where we can find better ways to provide great facilities and better service for our customers. And that's what we need to find. I think there's place for all of us. SBB are groundbreaking, but we also need smaller companies like Samfastheter that can help provide more real estate, because that's the biggest problem right now. The need is there. There is obviously lots of capital, but we need more infrastructure being built. So hopefully we can all collaborate and compete at the same time.
Yeah, so you need kind of more support from the government in terms of their rolling out their programs for elderly people maybe, or more private sector players coming in looking for that investment.
I think we need a better communication and between the municipalities and the private sector. Right now, it takes too long to be able to build the different infrastructures. We all know that the need is big, but at the same time, it takes too long to change the title plan. So for my sake, or from our perspective, we need to find quicker ways to be able to help. And I don't know the answer right now, but we need to look at the legislation. And I think with more players entering the field, we'll find smarter ways to do this.
Okay. And Poyan, you sort of specialize in the care, nursing and care homes. Jarkko, is that your main focus, or do you see opportunities in other parts of the social infrastructure? I'm interested in actually how broad a topic this is, really.
When we started in Finland, it was mainly kind of like nursing homes, but lately we've been very much focusing on the educational facilities, also public procurements, fire stations is a new sector in Finland. Wouldn't like to say that we started it, but we started it, and it's going well. So we basically also in Finland we cover all the public use kind of property sectors, and they all work for us. And nursing homes, that's definitely something we will kind of focus also in the future, perhaps more in developing those ourselves. But if the kind of I would need to underline the key sectors at the moment, it's definitely educational properties.
Yeah. And are you looking at that because the opportunities come up, or is that something where the yield is maybe greater when nursing homes becomes particularly competitive?
Well, perhaps there are several reasons. When you think about the nursing homes in Finland, they are often a kind of like private cash flow, private operators. But on the educational side, it's possible to do the deals with do the lease agreements with municipality. So it's a kind of government back reliable cash flow. And obviously there are yield differences, but I would argue that the kind of pricing or the yields in educational properties are really low in Finland. But we have a kind of special capabilities in there, especially on the project development side. And then when you look at the situation in Finland, the majority of the schools have been built in 70s, 80s. Publicly owned properties, there is about 9 billion euros renovation debt and huge investment needs. And in many situations when Finnish municipalities think about the kind of other alternatives for own investments, it's when the renovations are needed or new investments are needed.
Okay, and Carl, is it the same for you that you're looking at a broad range of opportunities, and which ones do you favour and why at the moment?
Yeah, we really like elderly care. We announced a quite large transaction last week. So we are trying to expand our footprint in elderly care, but also in the same time we are trying to grow the company. So we are basically looking at all different segments. And right now we're quite small in Denmark, so we're hoping also to increase our size on that market. And we also think that there will be a lot of more opportunities on the Norwegian and Finnish market.
Yeah. And Carl, for someone who's used to dealing with offices and retail and logistics, this is a very different world, isn't it? You have to be, sounds to me like you have to be a very different player to suddenly be in education, fire stations, nursing care. What are you more of an operating company as well? How do you kind of describe yourself in that way, and how do you act? I suppose, what's your business model?
Yeah, we see ourselves as a property company, but of course you need to understand the everyday business of the operators and the municipalities. So it's very important to have that collaboration and understand what kind of operations are there really in the property. So you need to know that. Yeah,
okay. And Poyan, again, I think it's very specific regulation-wise in the care homes. How do you manage those risks, that regulatory risk? You say it's stable, but things can change, can't they?
They could, but I can't see it. I've been working in this sector more than 10 years, and I can't see a more stable sector and than this. The legislation is stable, and I can't see any political party that wants to change it. If anything, I see an increase in the need. So I think for all of us, we have a couple of good years ahead of us. It will be quite fun.
Yeah, and do you class yourself as a property company, or do you almost, again, how you deal with that operating side, which is a very different risk than running an office, for example?
Exactly. At the end of the day, we are a real estate company, but with my background, we understand the needs of the private sector and the municipalities. It gives us a different perspective that makes the way we try to approach the deal in a different way. So we try to always look at the way the private sector companies, the nursing homes, how would they want to operate it, and move from that side. I think it gives us a unique edge, but it's hard to tell. Only our customers can really explain that.
Okay, and Jaakko, I think you're obviously also dealing a lot with this private public kind of dynamic, which can be politically sensitive. What's the mood in terms of, bringing private money into this sector at the moment?
I think it's pretty much the same, at least in Sweden and Finland. It's a sensitive topic, and the profits within the welfare system, that's an issue that almost all political parties like to raise, like to discuss, and a bit of a challenge whether it's right. But I would say that in a country like Finland, we are doing okay, but we can't afford to have policies which are either or. Both parties need it. We need cooperation between private companies, government, municipalities, and we need to kind of understand each other better. Obviously, it's not okay to do quick and dirty cases with government, with the municipalities, but you need to be reliable, you need to be trustworthy. And obviously, as Poyan just described also, I strongly feel that government, municipalities, public players, it would be good to embrace us more. Obviously, it's very important to kind of maintain competition and ensure that the pricing is correct and so on. Yeah. But it needs to be kind of inclusive.
Yeah, is that their main fear, Jaakko, that your pricing is not how they would like to see it? Yeah. And what about you, Carl? What's your view on this? How do you build, a partnership with the public sector? How do you line both those needs from both sides?
Well, on SB, we are also having a quite large development side where we are developing zoning plans and developing building rights. And therefore, you also get a connection with the municipality from that side. So, so from our side, it's good to have different ways of contacting the municipality. We have our development side, and then we also have the tenant as or the municipality as our tenants. So you get a lot of possibilities to interact with them and having a dialogue, and then you need to have local teams all around the Nordic countries and in all regional cities, because you can't really get the relationship with the municipality sitting from Stockholm. So you need to be very local and meet the people and get in the relations.
And do you think you need to be a specialist company in that way? Is that, Jaakko talked about, the type of company you are that's facing the public sector. What do you need to be as a business model for that?
Yeah, I think you need to be quite specialized, and you need to know what you're talking about, and you need to have a long-term view on the assets that you hold. So in that sense, you need to be specialized to be to have a good future within the sector, I think.
Yeah. Okay. And Poyan, I know from my experience in the UK, your sector can be part municipality, part private tenants and things like that. So do you have that same issue in terms of navigating that relationship with the public sector?
Of course. It's like Carl says, you need to have a very good relationship with the municipalities. At the end of the day, they are the one in control. But for our purpose, the private sector is a quicker way to work. We find that they're easier to work with, and they're much more clear to describing their needs. The municipalities have great needs, but there's also the difference between the political side and the ones working in the offices. So I think the main question is, how can we do this quicker and faster without losing control? The municipalities need control, and we need to regulate the costs. But how can we help the tenants or get their social infrastructure faster? I think that's the biggest hurdle right now for our sake.
And Jaakko, what can you bring to the public sector? I think, we talk a lot about what the public sector wants, but, there must be benefits in involving private money in these sectors that they can't, that is over and above the money, I suppose.
No, well, obviously there are at least few topics. One is investment capabilities and resources, and also knowledge. In Hemsö-owned school properties, and there are 25,000 kids studying, and that's a huge number of kind of like pupils, and we have a kind of like very large portfolio on that sector that we draw experience and use that when building new schools. And if we build about 3 to 5 new schools in a year, we probably are one of the biggest school builders in Nordic countries, and there are only few municipalities who have that kind of experience and knowledge on the learning methods and ways to support learning via special planning.
Okay, so you do you're more invested in what they're doing as well as what in the buildings that they're doing it in. You can bring that specialism in that way.
Yeah, one needs to be there. Naturally, we are as humble as possible, and don't try to argue that we know better than the municipalities. But it's one of the specialities real estate company needs to have to be able to be successful in this sector.
Yeah, and Carl, I suppose a similar question to you. What do you think you bring to the table in terms of being, playing that part across different social infrastructure sectors?
Yeah, I think basically the same answer as from Jarkko. It's the investment capability. We are specialized. We are building elderly care schools in all the Nordic countries. So we are doing more than a specific municipality would do. And then we also have our development side, which means that we can build a school, but we can also build regulated residentials around the school, and we think that we can provide something to the table. But I think it's important to stress here that there are very huge needs for social infrastructure in the years to come. So I think it's very important to have a collaboration between the private and the public. And as we can see, the boundary between private and public hasn't been really. It has been dynamic. Many actors in this sector is quite new. I think the sector has evolved very much over the last 5 to 15 years, and now we in Sweden have a private ownership for social infrastructure of approximately 20%, and before that the number was 0. So it has happened a lot over the last years, and I think that will continue to happen in the future. But it's important to collaborate.
Okay. And Carl, what do you think the other side to that is? I suppose the risks. The risks can be very different. You're dealing with, say, schools, young people, vulnerable people. How do you, this is a relatively new world for real estate. How do you manage those types of risks, within your operating partners and the work you do?
Yeah, I think this is a very important question for the municipality, and I think it's important to have a discussion regarding what's important here. Is it the quality, or is it important that it's private or public? And I think the most important question here is to discuss the quality and how do we provide social welfare rather than who is owning a property and who is operating a school. But I think this is the core for the municipality to secure that we have social welfare and to secure that we have private operators that want to operate schools, etc. But I don't think that owning social infrastructure is a core operation for the municipalities.
Yeah, my point, you were nodding your head a bit there. So a similar question to you. There are reputational risks, very different types of risks for companies working in these sorts of sectors. What's your take on that? I think you're not about, it's really about providing the quality, really.
I think Carl hits the nail on the head, because it's all about providing social infrastructure for the people living in the municipalities. And most likely SBB and Hemsö have more experience in building elderly homes, schools, compared to a normal sized municipality, maybe not compared to Stockholm or Helsingfors, but compared to the normal size. So if we can look beyond private or public owned, I think we would have a greater chance to really help the people living in Sweden and Finland, of course. So, and I also, regarding the risks, I think it's very important to, we are all real estate companies and real estate developers. You need to be sure, who are you working with? If the municipalities are the ones operating, it's fine. They have under certain regulatory affairs, but there are very good and large private corporations in Sweden, like Team Olivia, like Ambea, that really are serious and bring a high quality of service. So I think you need to choose your partners
Okay, so it's due diligence on your operating partner to a certain extent as well.
So, and I think all of us working here knows that, because the leases are so long, so you need to be sure that the one you're working with will be there in 15
a good long-term partner, yeah. And Jaakko, let's talk about the type of properties you're looking for. I think you mentioned fire stations, and I think they were existing properties. Are you looking at existing opportunity assets as well as looking into development?
I think in Finland we are able to embrace the kind of like the whole market. We look at the kind of like prime properties, kind of like ready properties with long cash flows, but also project development. We participate on public procurements all the time. I think we have submitted something like 3 to 4 bids during last 2 months and in coming months, and also project development initiated by ourselves. And then a thing that we also do, are very active here in Finland, we look at the properties where we see opportunities, perhaps in some cases kind of like ready business plans and then execute, but also with the current size of our portfolio, we dare to also purchase properties with right pricing, right location, and not knowing what will happen for the property in the future, and hence being able to answer to meet the needs of municipalities and government if there are something arises. Obviously, we do project development, we plan ourselves, but we try to be also flexible.
Yeah, and do you see, is buying existing assets a good way of finding value, do you think? Jaakko, maybe I'll ask you that again as well.
You asked for me?
Yeah. I mean, is there? It sounds like it's a competitive market. So I suppose I'm just trying to find, where do you find the value? Is it better to kind of on the ground market knowledge, sniffing out existing assets? Is it better to be building new ones?
I think it's a combination. There is still a yield gap between Finland and Sweden, and naturally Finland is a euro country, so there is no currency risk. I shouldn't be marketing this, but probably it's still possible to do good deals in Finland. But all others who are not in Finland, please stay away. Yeah. But I think it's a combination of several things, and obviously, in order to cover several fields, one needs to have kind of like own organization who is doing things, and we've also grown our own organization here in Finland.
Yeah. And Carl, how do you look at it, both from existing assets or development point of view, but also the countries that you're in? Obviously, leaving Finland to Jaakko, where else are you looking at the moment to find value?
The first question about the existing properties and or the development properties, I think it's a combination. We need to build more social infrastructure based on the demographic trends that we are seeing. But if we look at the different markets, I would say that Denmark is really interesting. We're having only a small footprint in Denmark, and that's mainly because Denmark it's a less developed market than Sweden and Finland when it comes to social infrastructure. So we are looking forward to make that market more developed, because they are facing the same demographic challenges as the rest of the Nordic. And then we think we can continue to grow in Norway quite a lot. They don't have any really major institutional players in Norway. They are having a lot of domestic capital, but it's mostly oriented towards fund structures and structures set up by various investment banks. So I think there's a role in Norway to play for really huge institutional investors and listed investors such as SBB.
Okay, and Poyan, where will you be expanding into other markets? I think you mentioned you're in 2 at the moment.
Yeah, exactly. We're always looking. Like Jarkko says, Finland is a country that's, I see a great need, and the demographic resembles Sweden a lot. But I have worked in Finland before, and there are quite large cultural differences. So it's not as easy as you might think. But for now, I think the special homes we're building in Sweden, the need is so large. Like Carl says, I think we have our hands full for a couple of years at least, and then we'll see.
So you might not have Poyan on your doorstep there, Jarkko. But Jarkko, when you look at interest in Finland and interest in the Nordics in this topic, are you seeing a lot of international capital, or is it mainly domestic?
That's one thing. There are huge differences between Sweden and Finland. Sweden has very strong domestic investor market. Finland not so much. And one thing we have in here in Finland that perhaps to some extent Sweden is lacking due to the strong local investors is, for example, German institutions. Not so far on the social infra so much, but for example, offices, retail. But the Finnish real estate market, especially in the larger cities, Helsinki metropolitan area, it's very international. I haven't checked the kind of like the stats last year, but I reckon it might be 60% international kind of like purchasers here in Finnish market.
Okay, so you think they might be swinging around to the social infrastructure sector at some point then?
Well, I think it's very likely when you look at how the pandemic corona has affected on the interest on the real estate sectors. It's housing, logistics, and social infra, which are kind of have the kind of like most interest at the moment, at least in Finland.
And Carl, do you see your competitors as being increasingly international within Sweden and other markets?
Yeah, we see some international capital coming into the market, but I also think that there is more room for Nordic institutional investors to invest in this segment. So I don't see the default solution for if you have an investment need, you don't really need foreign investors. As a starting point, you can. Yeah, I don't think there's a lack of capital within the Nordic region. But of course, there's a combination, and we see foreign capital coming into the market.
And just as a final question to you, Carl, I think outside of the Nordics, you're much more socially aware than we probably are in other parts of Europe. But we're certainly seeing moves into this type of sector for the ability to meet those social outcomes as well as financial outcomes. Carl, is that a trend here, or is that just something that we're tackling elsewhere, that's already part of the agenda here?
I'm not sure, Andrea, if I got the question there.
Well, I suppose so the UK, certainly we're thinking a lot more about the S in ESG, what's the social value that property people can bring. But I'm sort of always conscious that Nordics are far further ahead on this than us. So I wonder whether you're investing for those reasons as well, because you want to meet that social agenda.
Yeah, that's very important for us, and we issued a large social bond on the European capital markets some months ago, probably the largest in Europe so far. So that kind of questions are really important for us, and we see and we really see that the social infrastructure can make social impact.
Yeah. So, and the same question to you, Jarkko, just quickly. Do you see it as part of a social agenda as well as an investment agenda?
Yeah, it's a very important topic. It also comes from our owners being AP3 and obviously to be able to work with Finnish municipalities, Finnish institutions, Finnish government, one needs to comply, support and deliver on ESG issues.
Okay. Well, thank you to all my panelists, Poyan, Jarkko and Carl. It's been a really interesting conversation, and we'll be right back just a moment with the outside view. So thank you. Welcome back. Next, we're going to take a look at how the international investors consider opportunities in the Nordics for social infrastructure, and really looking mainly at the work that they do and how they undertake social infrastructure investing across Europe. I'm pleased to welcome Andrew Thornton, CEO of Principal Real Estate Europe. Andrew, welcome, and thank you for joining us. I wonder if you can tell us a little bit about your company's approach to social investing across Europe.
Absolutely, and good afternoon, everyone. I found the last discussion fascinating because it was an inside view in that it was Nordic investors, but people with different perspectives on different markets. And it just demonstrated how diverse markets are, how different drivers impact the markets. But it also brought out certain common themes that we're seeing around the world. So the first is a huge desire to look at demographic trends when setting investment policy. And when you can find countries with an aging affluent population, there's intuitively a good opportunity there. So as we talk to investors from around the world, when we talk about healthcare, when we talk about senior living, people are interested. It resonates with them. They can see the need. But what also came out in that conversation was that the markets are very different. We're seeing an investor appetite for long-term state-backed income, and that seems to be a trend, particularly in the Swedish market. But whenever we see those trends, we also think, is there an ability to create that space? Is there an opportunity to work with developers, with operators, to create that institutional quality of stock that is so in demand and actually quite expensive? So, I mean, to me, I thought the discussion was fascinating. And it resonated with what we're seeing when we're looking at different markets across Europe, the US, and elsewhere in the world.
And when you look at social infrastructure and putting that into your portfolio, which is a range of traditional asset classes, maybe more some of the alternatives as well, what do you see it bringing to your portfolio?
Well, I think if we take a step back, Principal's been investing in real estate since the 1950s. So it's seen a lot of cycles, seen a lot of trends. And when we started earlier in our careers, the safe assets were the offices, the retail sectors. But we've seen how change in technology, in approach, can really cause you into question where you want to invest and why. So if you take a step back and say, fundamentally, real estate is about serving the need of the occupier. And we touch all aspects of people's lives, from the hospitals or homes where they're born, where they're educated. We heard about education sector earlier, to where they work, where they shop, where they play, where they go for health, where they go in the later years. So we touch across people's lives. But as investment managers, we also deal with their savings and their money. And trying to get that alignment between what people need from a savings perspective and what people need from a living perspective is where I think we start to add the most value. So fundamentally, investment capital looking at, can we get long-term earnings related income streams? How might we achieve that? And increasingly, that's not by investing in retail. Everybody's surprised that retail rents fall, but have you been looking at the price of clothing, footwear, electronics over the last 20 years? It's been getting cheaper and cheaper, so it should be no surprise that retail rents have been under pressure. But if you look at where people live, at the need for healthcare, those are things where people are spending more and more of their money, and therefore more likely to deliver the performance and returns that you're looking for. So when you look at institutional portfolios today, there are 3 or 4 things that people are taking into account. The first is the need to diversify away from the traditional asset classes of retail and offices. And social infrastructure has a big part to play. They're looking at how they generate income in a world where bonds and other sources of income are really very hard to find, delivering decent yields. And that's where state-backed income streams with asset-backed are good. Similarly, there's been a lot of printing of money and a fear of inflation. So if you can get real assets that fundamentally are likely to perform in accordance with people's ability to pay, then that seems like a good place to go. So I think a lot of interest in alternatives, a lot of interest in social infrastructure as a result.
Yeah. If I hear that conversation that we just have, it feels like a very different conversation I have with any other players that I speak to in the market more regularly. You know, they're streets ahead in terms, I mean, we might be thinking nursing homes, you know, affordable housing would be something we probably put into social infrastructure. But I feel like we're nowhere near education or other services. How do you think, as you know, international players are kind of embarking on social infrastructure? Where are we on that journey?
Well, I think it demonstrated the benefit of looking at markets outside your own, because you get new perspectives. Fire stations hadn't figured on our radar screen. Yet being able to take control and put out fires in real estate is absolutely fundamental. So
it's very true. It's a good alignment, isn't it? Yeah.
So it's something to think about. But I was also interested by what wasn't discussed. So if you were having this conversation in the US, it wouldn't just be about nursing homes. You'd be looking at the communities that work better. And those would typically have some senior living for the 55-year-olds plus, which is getting frighteningly close to being relevant. You'd then be looking at the nursing care, but you'd also be looking at medical facilities. You'd be looking at pharmacies. You'd be looking at a much more integrated model, in part to get the scale. If you take Germany as an example, typically homes are limited to about 100 beds. That means a lot size of 10 million or so. Well, it's a lot of work to aggregate those portfolios to build something that is interesting to international capital. So looking at how you can expand, you know, we talked in the last session about geography, but can you push those use classes to get bigger, more dominant complexes? I think that's very relevant. Okay. And if we're talking about public-private partnership, what about town centres? You know, they're at the heart of the community. You rely upon the state for the permissions, the controls, but also potentially increasingly for breathing life back into those communities. So what is more important to a community than its soul, its city centre, its town centre? So I think we could expand more there. And then as you look at infrastructure, it grieves me that as real estate people, we let somebody else play with infrastructure when the access to digital, be it through telephone masts or through data warehouses, is really critical. The fibre network that allows people to work from home, that provides social inclusion, that's all very important. So I do think we should broaden our perspectives, look around the world, and really own this space and look at how we can build international investment flows into it.
You'd be looking for scale, and you'd be looking for some, as you say, interactivity between those models to make sure it's more about community as well.
I think it's really important. But if you look at the other trend we're seeing today about impact investing, what creates a bigger impact than being able to take care of your young people through education, your elderly people through the care that you provide, or through those unable to afford their own homes through social housing and intermediate housing? And as we look at the changing legislation, the flows of capital into ESG type products, I can see that a lot of the flow of money, the money in motion, will be looking very strongly at ESG. So if you can start to look at how social investment, social infrastructure can make a difference, can be an impact, how you can work with the local authorities to de-risk it, how you can start to make that difference, I think we'll see a lot more flows into the sector, and that's good for our communities, but it's also good for those of us that work in that space.
Yeah, I absolutely agree. But I think what's been the challenge has been in the complexity of all that. And that begins with that relationship with the public sector. And I think as an industry, you know, we've always struggled with this. I think it sounds like, again, the Nordics are a little bit ahead of the rest of Europe and, well, UK thinking mainly. So how do you think about that political relationship and that notion of regulation, which sounds stable in the Nordics, but might not be stable in other countries that you look at?
I think whenever you assume that the political environment is stable, you're at the greatest risk. Whenever you assume it's dynamic, you've got a chance of surviving. So as a case in point, we invested recently in some social housing in Ireland. And I like the model because it's not doing anything sexy. It's taking existing stock that perhaps has been underinvested in, spending capex, upgrading it, and then making it available at a discounted rent to the local authority on a long-term lease. So you're upgrading space, you're providing homes, not flats, which is what people need. You're working in partnership. And to me, that's a model that feels very replicable around the world. Having made that investment, within a few weeks, we started to read press comments about the concerns that there was with private owners having large portfolios of homes to rent. And was this freezing out the home buyers, the first-time buyers? Now, it looks as though there will be legislative change, but this will be more focused about institutional investors buying big parts of new housing estates rather than existing stock. But it does demonstrate, no matter how strong your story, housing, healthcare, education are so political that even if something works well, there is a risk that people will start to tinker with it for a whole host of different political reasons.
And then you have the next challenge that you'll always be the outside player if you go into somewhere like the Nordics. And that must be particularly difficult in something around social infrastructure.
And I think this is where you've got to be very clear about where you're playing. If you're going in as a long income player, acquiring at 3.5% a long-term lease backed by the government, the risks associated with that are much lower. The residual risk is a small proportion of the overall value that you're acquiring. But if you're going into the development space, if you're doing anything high profile, then you can't do it alone. You need a good local player, either on your own team or, we heard from some great potential partners today, all people who understand the politics, the market, the challenges, but also importantly, the opportunities and how to get things done. And I think as a non-domestic investor, you have to be very, very humble. You might think you see something, but it's much, much more likely that you're the dumb foreigner who's missed something. So humility is incredibly important when you're investing outside your domestic market.
And presumably local on the ground partners is the other key, particularly, as point of getting the right operating partner, having that due diligence that you've got a trusted partnership there.
I think particularly in operational real estate, understanding the partners. So perhaps just drawing a parallel to Germany and versus the UK. Germany is a very fragmented market when it comes to the operators of care homes. And that can be off-putting for an international investor when you're dealing with a not-for-profit local operator that has 10 or 15 homes. But we've seen the opposite in the UK, where we've had very large chains put together by aggregation, by private equity companies that have overlaid financial leverage with PropCo-OpCo leverage, with the challenges at the cash flow level of making these things work. So increasing costs of nursing care, of food, of energy. And they ended up in a very difficult position. So actually a local operator who knows what they're doing, who doesn't have that high level of financial leverage, could probably be a safer bet than going for the big brand names that you think and potentially trust. So absolutely in that space, you need the local intelligence, you need the knowledge as to who you can trust, where to invest and why. And you can't gain that just by studying reports. You've got to work with experts like we heard in the last session.
And finally, if you were to think about the Nordics, what sounds interesting? What prospects do you think you might look at in this market?
Well, I found it very, very interesting that even the domestic players were saying the challenge with Sweden is there's so much domestic capital. And often as a non-domestic investor, you've got to work out where your competitive advantages lie. And if there's a lot of domestic capital with a domestic investing bias with domestic benchmarks, it can make it tricky. So we found Norway quite pricey because there was a lot of locally generated wealth. Sweden, with its very long-term saving schemes and pension plans, yet much harder to find value. And interesting for all the reasons said about the euro, about a more open, more diverse, more international investor base. Denmark has a lot of opportunities as well. So I think it's about picking your spot, understanding where you might add value. In Sweden, it might be about backing and working with a developer to produce the stock that the domestic institutions ultimately want to own. Whereas in Finland, it may be that you can buy standing investments, you're not taking the development risk, but to get an interesting return profile, particularly for a euro-denominated investor. But as with all of these things, it's about keeping your eyes open, keeping your ears to the ground, and being open to opportunity, and prepared, as I said earlier, to be humble and learn from the locals.
Great. Well, we expect to see you in the Nordics when we can fly in. You can visit and take a look around. Andrew, thank you so much for your time. That's been so interesting to get your view and that wider European perspective on social infrastructure. So thank you for joining us.
Thank you.
And okay, we'll be back for our final session in just one moment. Finally, I'm pleased to welcome Sven Darlin, partner at Nordano Partners, to give his views on investment flows into social infrastructure and how we'll see the sector evolving. Sven, we've heard a lot today. I wonder if you can maybe pick out a couple of highlights from what you've heard in the last two sessions and what's kind of interested you the most.
Thank you very much, Andrea. It has been very interesting to listen to all these sessions, and it's quite difficult to summarize, but I'll give it a go. I think, first of all, I think that a lot has happened with social infrastructure in the last 5 years. It's a completely different sector now compared to what it used to be, or actually it wasn't anything at all if you go back in time. So I think you can safely say it's now an asset class of its own. Also, I mean, if you look logistics, if you go back in time, it used to be bundled together with warehouses and light industrial, and now it's an asset class of its own. I think the same thing is happening with social infrastructure. Also, one interesting aspect regarding social infrastructure is of course, I mean, what is social infrastructure? What's the definition? Is it the tenant? Is it the purpose of the building or the property? Is it the particular activities performed on the site? Or is it the funding? Who's funding this activity? So I think in my book, you need a couple of these four check boxes to have social infrastructure. And I don't think we really need, we don't need one definition. I think it's good that one investor or maybe SPP has one definition of social infrastructure and HEMSA has another. That's fine, because it's a new field, and I think diversity, as always, is good.
Yeah, I mean, what my next question to you was going to be really about what do we need to do to move the asset class on, or the sector on, let's say. I wonder if actually definitions and understanding the range and scope is one of those things.
I think we should be open regarding definitions, and I mean, one thing we would like to do, and that has been discussed quite a lot today, is creating a better playing field for non-Nordic investors. As many have said today, I mean, it's difficult for a non-Nordic investor to invest in social infrastructure because you need the relationship with the municipalities, with the government, and so forth. But to some extent, that is already happening, but in another way. If you look at foreign investors, you have quite a few foreign investors buying or owning shares in listed property companies like SPB. You also have lots of foreign investors buying into the bond programs of Hemsö or SBB. So I think those are already coming in through the back door, you could say. And regarding the bond market, I think that the cash flows from these type of assets are very well suited for securitization and to pass them on to bondholders or preferred equity or whatever instruments you can find.
Yes, I mean, there seems to be so much domestic capital coming into the market. And I liked Andrew's point that actually there's a nice alignment there between your pension fund money supporting, you know, the needs. There's a nice alignment for what pension fund money wants to do in the long term. So do you think we need to open it up to international capital? Do you think we need to smooth the path for more capital like that to come in?
Yeah, I think we should do that. And we must also, I mean, in general, we've said today that and we see that a lot in the transaction market, in the transactions we work with, that, I mean, supply doesn't match demand. Demand is much more higher for social infrastructure, investor demand, compared to the supply. And then in the different Nordic countries, I mean, supply and demand can be on different levels and more absolute terms. So for instance, if we take Sweden as an example, I think there's quite a lot of supply of social infrastructure, not the least because we have a lot of private operators that are government-backed, but still private operators in the healthcare and educational sector, which you have to a lesser degree in the other Nordic countries. And I think those private operators are maybe more keen to have an external property owner rather than being an owner-occupier.
Right, so there's kind of there's sort of different waves of how international could come in with that private money first, and then the working with municipalities next, really.
Yeah, and I think so in Sweden we have a large supply actually of social infrastructure, but an even higher demand from investors. And if you look at Finland, for instance, I hope Jarkko is not going to be mad at me, but I think that the Finnish market is very similar to the Swedish, but maybe lagging a bit behind in some aspects, but following the Swedish market closely. Whereas I would say that the Danish and Norwegian market are much less developed in the sense that there is not really that much supply for the investor market in this sector.
Yeah, and obviously the companies we spoke to are quite specialist today, and I wonder if you see other companies, you know, have been more in traditional asset classes moving into this as well, and whether it will prompt those types of opportunities as well.
I think that's maybe a bit of the problem, that everybody's moving into this, and also as Andrew mentioned before, I think the trends with impact investment and ESG themed investment and so forth have an impact on this as well. But even how should I put it? Even normal property investors want to do this as well. So you have demand coming from very different types of investors, really.
Yeah, moving into these types of sectors is an immediate, you know, impact, isn't it? You know, you don't suddenly have to make offices a social impact. You can do that, but you know, it's immediate an impact by investing in nursing homes or, you know, senior living.
Yeah.
Yeah. And what do you think will be the fastest growing parts of this social infrastructure landscape in the next 2-3 years?
Well, I think and hope we'll see more growth outside of Sweden, where this sector is really well developed already. So I hope to see much more in Denmark and Norway, and to some extent Finland, although a lot is already happening there. And I think also, as somebody mentioned earlier, I think there will be other types of infrastructures that like communications, electricity, that type of infrastructure that maybe also can be added to this sector or asset class.
Yeah, I think, like Andrew said, it's about city building in a way, isn't it? You know, it's about everything that we need. The real estate has been too narrow in what we see, and that actually we can broaden our horizons in that sense.
Yes.
Yeah. Okay, well, thank you, Sven, for your opinion on kind of, you know, views on what's happening at the moment. It's been really great just to have you help us sign off our sessions today. I'd like to thank all our speakers who've been with us today, all our panelists, and I very much encourage you to take a look at forthcoming seminars from Nordic Property Insights from Fragalu. Just look at their website. And otherwise, I'd like to thank you for joining us today, and we look forward to seeing you at the next seminar. So thanks very much and have a good afternoon.